All right. So, good afternoon, and this is a new one for me. I haven't seen or heard this yet, nor am I familiar with this YouTuber. The Devil's Stockbroker. The Devil's Stockbroker came out with a video yesterday called Short Exempt Squeeze Signal Triggered. Short Exempt Squeeze. I've never heard of a short exempt squeeze. But let's find out. I watched a bit of this with the sound off and the closed captions on, and I just gave up on it. So we'll take a look at it here, see what this nonsense is about, right? Wow, dramatic. How about if we skip that? Yeah. We'll let this load for a second here, and make sure everything else is set up properly. We do have the futures right here, ready to go. We should have, we're supposed to have Tasty Trade on there. Where did that go? There it is. So we'll have that. When the time comes. Short exempt squeeze. And it's going to be one of those days, it looks like, with the internet connection. See what we can do here. The hedge funds must be trying to shut me down today, because they know that this thing is coming, winding down, but they don't want it to wind down. So anybody who's exposing the truth, they're attacking. It's clear. You know, we know that. Everybody knows that. Been like this for the last year. Why do you think my channel got deleted before? Right?
Go into some of the finer
Okay, we're going to have to go a little bit
right
better
now,
quality
AMC
than that. A little bit better than 144p, okay? It's just not going to work. I hope everybody's having a good weekend, and let's see if we can get started here with this. This may take us all the way until until the market opens. This rate. By the way, I got a, I get these shitty comments on my videos, and one of them was 150 views, smiley face, laughing face. And my response was something like, well, yeah, you guys aren't seeking out information. I mean, it's not my fault that nobody's watching it, right? Sad that only 150 people care.
AMC.
Okay.
AMC Entertainment Holdings. currently looking at some of the technical patterns on the charts, but that's not the most interesting part about it. But we'll get the nitty-gritty out of the way before we go into some of the finer details.
Look, he's
right
got
now,
his
AMC has been in a pattern of consolidation, establishing higher
Ortex
lows.
and Tiblio sponsorships right on the bottom of the frame.
For the last about 3 months, I would say, since the middle of May of this year, and is currently trading at around $14.47. As you can see, that since the ticker had squeezed up to about $72 in June of last year, we've been consolidating down in this this descending triangle pattern, more like for the last year. AMC's been trading down in this narrow.
Anytime you want to load, that would be okay with me, right? Jesus.
Narrowing channel, slowly getting closer and closer to $10 before it bounced right below at just above $9.50 and has since recovered at least some of its position.
And you guys know how I feel about these play-by-play narratives, but I'm just going to, this is a new grifter to me, the Devil Stockbroker, so going to just power through
resistance at $15. We broke out above it just briefly in early July, and then we're pushed back down below that area of support. Now that we have established this new level of support at $14 and seem to be testing that low and holding that support, the next step for AMC is to break above that $15 in order to retest the $16 level one more time. Looking at a handful of the technical indicators on the RSI, we have the RSI mostly going in a bullish direction, just trending towards the upside and showing that AMC bounced off support at exactly the RSI signal line. That is the moving average for the RSI. The STC momentum indicator, which is loosely based on the MACD, is currently red, so we are in a pattern of consolidation as it would appear. And the MACD is showing very much the same, with the MACD crossing down just a few days ago on the daily chart and seems to be moving back towards a area of consolidation. As AMC's price moves up, the MACD is slowly coming back down.
Sounds like typical bullish stock analysis. Heavily bullishly biased stock analysis to me.
Another indicator that I like to refer to just occasionally is the on-balance volume. That's OBV. This measures volume as buying or selling pressure on the stock, tracks the balance, air quote, about every single day. Currently, I'm looking at AMC on the 2-hour chart, which is showing that the OBV, after it moved up from early May up till the top of $72 in June, the OBV has more or less stayed pretty much even.
You know what that means, right?
Down to the OBV here in AMC's early on squeeze, the OBV had actually created more of a wedge pattern where it had suddenly broken out above and then signaled the next move to the upside after roughly May the 25th, which you may remember I called out.
Don't think so.
Early on, long before I became the Devil Stockbroker. What I'm currently observing in the OBV is that AMC is still continuing to trade with the OBV hitting a ceiling, more or less, right here at around 1.4 billion shares on balance, according to the OBV. Every time that we have tested this area,
another person who doesn't understand on balance volume. Yeah, not surprised, but see what his conclusion is.
Gotten slapped down, and I've been theorizing that this is the ceiling that must be broken through in order to see AMC make another challenge to the upside and potentially squeeze shorts out of their positions.
Okay, totally wrong. Wrong analysis with OBV. I mean, the reason it stayed roughly the same, by the way, it's not really the same, but when you zoom out like that, you know, it has to rescale so to include this large move. So if you zoom in past that over here, you'll see that it is pretty contoured, but it follows the volume. There's a crap ton of volume here, So the OBV moved a lot. After that, and especially now, the volume dried up. I would say it's anemic. So, of course, the on balance volume is not going to move much. Remember, the direction the line moves up or down is based on whether the price candle is red or green. The amount by which it moves is dependent on the volume. So big green candles here with big green volume candles equals a big move up in the OBV and vice versa. So, nothing burger there.
What I'm currently observing in the OBV is that billion shares to
and the actual value of that is meaningless. You're looking for relative change, convergences, divergences with the price, and so on. But it's not an actual accounting of shares.
make another challenge to the upside and potentially squeeze shorts out of their positions. Looking at the moving averages, I'm going to be using exponential moving averages for this particular technical analysis. What we saw the last time that AMC's EMAs started to consolidate towards each other after coming up to a downtrend is that they hit resistance on the 200 period average. That's this red line moving along the chart here, before it finally had a breakout, and basically no resistance could stop the price from moving up to the upside once it had broken through. Here more recently we're getting something very similar in that all of the moving averages have been consolidating towards each other, and the price has been bouncing around, ranging quite volatilely, but still stuck in this narrow band of trading where it's gotten tighter and tighter and tighter. And now for the first time we've had this clear breakout where all of the moving
Okay.
averages have spread out from each other and are trading well above trend, above the 200 period average. Now, we did just break down below this average and we are consolidating below it, but we have established a clear area of support here at $14.50, $14.
$14.50, $14. Okay. I mean, yeah, let me get this off here, but, well, actually, let me not get that off there. So I have this Fibonacci retracement here on, I forget where it starts, but somewhere down, last May where the price was low. And then this 0.236 level is at 1868, which is pretty much exactly where it bounced off of back in a couple weeks ago. And just in terms of this year, you have the control point, or where the most volume was traded, seems to be at like 1530, 1540, and right in here where this red line is. So I mean, that's okay, but I don't see how this is going to really change things. But
in my opinion, this is actually the ideal scenario for AMC because for the most part, AMC's best performance came from slow grinds upward, moving slowly over time to test resistances, breaking through, and establishing consistent support every time that it made a move to the upside. Every time that it instead made this massive volatile move to the upside, it got smashed down and closed far lower.
When is he
and
talking
then had
about?
To regain all of that ground over a lengthy period of time, allowing market makers and brokers to make money from selling options out of the money. The critical area for AMC is going to be...
Or you could turn that around and say, these people foolishly bought them because they were told it was going to go back to the moon by all of these guys on YouTube, and it never did. So market makers are always selling options. They sell options on every stock, ones that go up and ones that go down. So moot point.
For it to continue along this slope here, this trend line of higher lows, and for the price to break out above this descending trend line. Once it's able to break above and establish a clear area of support, it will be free to move back up to the upside after a brief period of consolidation over the $15 range. There's no telling exactly how long or little this would actually take, given that we're coming up on earnings in the first week of August. I'm pretty bullish going into this first earnings week
really.
for Q2 of AMC, because the summer season is one of the best.
That's why your analysis is pretty meaningless. That's why, this is basically pointless.
And it's where the box office has had its best numbers.
Who wants to hear somebody who's bullish on AMC talk about technical analysis? I mean, seriously.
Speaking, and AMC's already
what purpose
posted
does this serve?
Numerous PR statements indicating how well it's performed at concessions and box offices, although we are still waiting, of course, for the hard numbers on earnings. Very quickly, we're going to come over to Ortex and take a look at the short deal for AMC. As before, utilization still maxed out at 100%, just like it's been for the last several months. And the short interest estimate for Ortex has been moving up. We've now hit a new recent high of 101 million shares estimated to be sold short on AMC. That puts the estimated short interest at approximately 19.6% and the free float on loan at approximately 28%. Days to cover is still sitting at about 3.4 on the high side, so that's actually quite a high number for the amount of shares that are currently sold short on AMC for a stock ticker that's got such a large market cap and such a large float. That would take quite a lot of time and quite a lot of price action to actually evaporate all of those short positions if shorts were forced to cover them in a short time.
Why would they be forced to cover them in a short period of time, though? Okay.
More pressing is the cost to borrow, which remains high and is still consolidating.
Oh yeah, it remains so high. It's 9 point. The max is 10.5%. 10.5%. That's a yearly percentage, right? 10.5% of $14. 10% is $1.40. You're talking about over a year. $1.40 divided by 365. That's 0.0038 cents per day per share. Yeah, that's a high cost. Oh my God, how are they going to afford that? Holy shit. For 1 million shares, that would be, oh my God, $3,800 a day. That's 1 million shares, and there's 100 million shares. Oh my God, it's $383,000. How will they ever come up with that much money?
At approximately about 9.71. That cost to borrow would be annualized 9.5% of the short's total cost of their position just to maintain it for 365 days, give or take a few dollars per share.
Well, they don't hold it for that long.
All other pieces of data, the one that is the most interesting to me is this massive spike in failures to deliver, which hit a high of 9.7 million. This is not the highest that AMC's failures to deliver have ever been. That number was actually January, back when the failures to deliver was 27.69 million, and that was at a time when AMC's float was closer to 250 million shares outstanding. Much to my surprise, AMC still remains off of the threshold list, so it's unlikely that we'll see AMC squeeze until the stock has been on the threshold list for a significant period of time. Reason being is that the threshold list determines when market makers and broker-dealers are at risk of being forced to close positions that are sold short. And
last time it went on that list, it did absolutely jack shit. It did nothing. And like Manny says, they love to pay max cost to borrow. I think it's more, I think they can write it off anyway. So, but I'm just going to go back just a little bit here. because he's talking about failure to deliver.
Stock has been on the threshold list for a significant period of time. Reason being is that the threshold list determines when market makers and broker dealers are at risk of being forced to close positions that are sold
Model 3
short and
dude.
account for all of the late
Hello.
settlement that's taken place over the past 35 trading days. However, one thing that we can point to is that the security lending volume has been coming down from all-time highs, indicating that either interest or the ability for shorts to continue shuffling back and forth shares that have been borrowed is becoming less over time. And this is the same activity that we saw where AMC short lending volume hit a massive high around the middle of May in 2021 and slowly trickled downward to a low point just before the price squeezed massively, indicating that shorts became illiquid and that borrowing shares became extremely difficult just prior to the big move upward.
Oh, is that what
However,
that indicates?
At that time, AMC was most certainly qualifying for the threshold list with failures to deliver spiking up massively at that time. We are seeing some of that action right now, but still AMC is not currently on the threshold list. The one thing that I would point out is that AMC didn't end up on the threshold list in June until after the price had moved up to $72. So I could be wrong here. This is just my opinion, but for the most part, the squeezes I've seen usually take place while the stock is on the threshold.
Okay, so don't know about that, but here's a Reddit post that's relevant here. What in the actual fuck is that number? Like, what in the actual fuck? How is this still a thing? See you on the moon, Mayo Man. And they have fails to deliver, and they're indicating this here. June 28th. They're saying on June 28th there were 9.6 million fails. So they, of course, they cut off the change, but that was an increase of 6.8 million. And then the next day there were 2.8 million. So it decreased by 6.8 million. So those obligations were fulfilled. Now, if you come down to the comments, you see how in the flying fuck did 628 have 137 million FTDs? What was the volume that day? And then they say 137 million dollars, not shares. Still 9 million shares a fuckload, blah, 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 right? There should be 137 million of buying pressure on the second, blah, blah, blah. Is that over $200 million for 4 days, right? So the thing is here, like, if you look at the volume, that's what they were bitching about here in June. Here are the days right here. So here's the 28th, here's the 29th, and it was the 28th was the day that had the crap ton, right? The 28th. So that's this day right here. So then they're like, well, why, blah, blah, blah. Well, the thing is that everybody's missing here is that this is the settlement date, not the trade date. So the settlement date is 2 days after the trade date. So for the 2 trading days. So the settlement date of the 28th would actually indicate a trade date of the 24th. So that's here where you had 80 million of volume. And then the next day you had 77 million of volume. So much more likely to be failure to delivers on these days, or particularly this first day, which was the higher volume, than the actual day that they were reported, which of course is the settlement date. So if they're not delivered by the settlement date, then they go on to become this FTD. So, just there is no understanding of this out here in Reddit and this community. It's just not something that is understood whatsoever. And likewise short exempt, but I mean, we haven't even gotten to that yet. We're halfway through this video and he hasn't mentioned that yet. So I'm really curious about this short exempt squeeze signal. What the fuck does that mean?
Securities list. The point that I'm making here is that I look to AMC to continue to make slow moves upward, increasing the price and thereby increasing the pressure on shorts.
Oh yeah?
My emphasis will continue to be on
Every time that
building a
happens, it's
position
down.
of shares supplemented by long expiring call contracts that are close to or in the money, i.e. leaps. I would like to briefly review a concept that I visited on AMC and multiple other squeeze plays that I've covered. That being the short exempts that are reported by FINRA. Short exempts, if you're hearing this term for the first time, is just a short which has been sold exempt by a broker-dealer or a market maker. Short exempts are exempt from the locate and the uptick rule, and they are supposed to be a special use case. But
ooh, exempt from the locate rule? I don't know about that. I do not know about that. I do not believe that that is possible. That is correct.
in actuality tend to be used for abusive short selling on the part of broker dealers and market makers, who are the only
That's also not correct.
entities which are permitted to use them. The advantage of a short exempt is that the broker dealer does not have to locate the share before they sell the share short, in which case that means that it is a naked short for the life of that short until they locate that
That
share.
is not, that's 100% incorrect. 100%
The time
incorrect.
limit for this is 6 trading days. What we've observed in AMC, and this is data taken from May of 2021, shows that short exempts became a lot more prevalent in the stock while it was trading each trading day as it was trending upwards, showing that the moving averages of AMC were slow.
Oh, well, I bet that if you look too, that that off exchange volume probably was rising as well then, right? The amount going to the dark pool, like they like to say. Okay, now we'll put all this together in a minute.
Slowly pushing to the upside, up from $8 all the way up to $12.50 and then $13.95 and $14 on successive trading days, particularly after a massive spike in short exempt volume. What we can treat this as is that short exempts, which are typically used in order to take the other side of a buy order, usually by retail investors, market makers will use the short exempt in order to defer settlement for the trading.
No.
To put it more simply, when you make a buy transaction, the market maker says, I'll get that share to you later, and then sells a short exempt, marks your position, and then waits to find a share at a cheaper price so that they can deliver it to you on a discount for themselves, thereby keeping the difference and profiting from it. In this particular instance, the euphoric buying on AMC was so massive at the time that what actually ended up happening was the price continued going up despite market maker and broker dealers' best efforts to push the price down using short exempts in order to defer delivery. What I suspect this was a combination of gamma squeeze with a lot of call positions that were slowly going in the money from out of the money, a massive amount of buying of next week expiring call options that were even further out of the money, which subsequently also went in the money later on, forcing market makers to delta hedge those positions by buying shares.
Right.
And it essentially became a giant boulder rolling down the mountain, which they could not stop it at that point. What really threw it over the edge, I feel, or at least signaled that they were losing control, was that short exempts were massive. This was a huge number, showing that 2% of every share sold short was actually a short exempt, and that short exempts themselves made up about 1.2% of the total trading volume on these two particular days. And it continued to remain high up until about May 19th and 20th, when they were trying very, very, very hard to suppress the price where the short exempt ratio, that's short exempt volume divided by short volume, reached a massive...
See, he's talking about short volume here. I mean, that's the problem. Like, short volume is not short selling. It's not establishing short positions. Okay, so mostly all of the short volume you're talking about is actually off-exchange market makers selling long positions to retail. Okay, yeah, and some of those, most some, most, whatever, of those transactions are well, most of them are, if not all of them, are going to be marked short in the transaction that would be reported on the tape. You don't see that, but it would be if you had access to the the actual data. They're going to turn around and buy the shares, and that's not going to be a tape reported transaction. It's not a non-media disseminated transaction, they call it. So, and that quote unquote covers the very, very temporary short position that gets established. Doesn't really get established. Like this happens almost simultaneously or instantaneously. It's a dumb way to do it. I think they could probably do better in terms of reporting this, but you're talking about short volume here. That's not short selling, as in hedge funds establishing short positions or whoever. Like 99% of it is not that.
4.2% back to back. And still, the price moved against them only 2 days later because retail refused to step away and they refused to sell. Instead, we kept buying more, and that pushed up the price. And then, well, you know what happened after that.
Mm-hmm.
So why do I bring up the short exempts? Well, the reason is that we have similar conditions going on now to what we had going on in April and May, where short exempts were being used, but the price continued to consolidate sideways or go.
Now, how is it anything like that? How is it anything like April and May of 2021? I mean, seriously, how is it anything like that?
Go up slowly over time, and the market makers weren't able to make a profit.
Manny's not impressed.
Price back down. What's more is we have a catalyst coming in the form of earnings, which is only a week away. So we've got something big coming, and we're at a major slope of resistance that's been pushing us down and keeping us contained in this lower area below $18 for a significant period of time.
Well, I wonder why that is.
What we can do is we can refer to the short exempts, which are currently being published right now by FINRA, to see, are the market makers still in control, or are they struggling right now? Let's go take a look. Well, shit, that looks like a lot of loss of control to me. The short exempt ratio for the last
month, another Canadian
the
grifter.
entire month has been in excess of 3% on most days, reaching as high as 6.2% on the 18th of July. Every day that the price moves up higher, it becomes more and more difficult for the market makers to push it back down. What is really putting the pressure on?
See, like that right there gives you, excuse me, God damn it, that gives you away as being clueless. Like the market makers pushing the price down. Sounds like a market conspiracist to me.
Is buying shares and buying it from the lit exchanges because the market makers don't control that volume. The only volume that the market makers control is the volume that's being directed to them by your broker, who is using payment for order flow to send your orders to the market maker, which they can use internalizers and dark pools to settle the shares without exposing the price action to the national best bid and offer, also known as the NBBO. We're still waiting on the number from today, but right now, just looking at the trend for AMC, seeing that the price is continuously consolidating at this.
So then, how in the fuck
significant resistance?
If that's the case,
it has been doing for
right?
a significant period of
all
time,
that conspiratorial nonsense is the case.
May be getting ready to make another.
Then how were you able to push the price up last year? Because everybody was using these shit brokers last year, and yet the price went up. Now, all of a sudden, if you buy on payment for order flow, it does not push the price. It has no effect on the price because they just throw it in the dark pool. But last year, somehow, it didn't. Makes no sense. Okay.
Push to the upside. And if earnings is at all a surprise to AMC, this could be enough of a upset to trigger a loss of control for the market makers. And once again, we have the possibility of that boulder rolling down the hill scenario. If they lose control of the stock, once it gets out of their hands, there's no stopping it. Why is there no stopping it once it gets out of their hands? Well, because if you look at this current chart that I have up, this is actually a gamma ramp chart that we've developed for our Scourge bot at Hell's Trading Floor. What this chart tells you is the percentage of the float that would be in the money, or the amount of shares that would actually need to be delivered versus the float at a given strike price.
No.
At $20.
What are you talking about?
Price were able to reach that would cause more than 5.5% of the total stock outstanding shares to be in the money. If you do the math on that, that's about 28.8.
No. Oh my God. Wow.
7 million shares that needs to be purchased by market makers, assuming that those calls were sold naked and they don't actually have the shares on hand to deliver if they were asked.
Well, they probably have another option. They probably have another option that offsets it, because that's what they do. Because everybody, just accepts this delta hedging. Oh, they have to buy shares. They have to sell shares. Nobody's taking the time to look it up and actually see. And actually, there is relevant information that talks specifically about these stocks from late last year that I dug up that completely refutes this nonsense. Oops.
Naked calls are not the same thing as naked shorts. They do represent an unhedged risk on the part of market makers who sold those.
The market makers, I mean, listen to this.
Calls unhedged risk. Shares of. And while naked calls are not the same thing as naked shorts, they do represent an unhedged risk on the part of market makers who sold those calls without actually having shares available and in their inventory if they were actually to go in the money and they needed to deliver those to whoever purchased the call contract. This represents a possibility for the price to completely run out of control, because
no, it doesn't.
Once it reaches that
here's Tasty Trade about to come in.
The market maker can't hedge in the past.
Means it's the first call Sunday
right away.
evening. How are you, my friend?
Is to start.
Nothing sounds better than a little Stevie Ray on Sunday night. I am I'm all for it.
You ready? You had a nice restful day off on Friday.
Yeah.
What?
Well, it was a restful day, except I butchered it pretty good trading. So maybe I shouldn't take the day off, because I way over traded and did a few stupid things. But I have to blame most of it on you, because you told me the top was in on the lows. So, like you
No, I told you the tops were in at the tops of the day, which then became the new tops. Let's be fair.
No, I'm being fair. No. I'm giving you every benefit of the doubt. But no, I messed up a couple things. But and also, you know what hurt me on Friday? What happened in China?
They killed it. Baba was down.
I know. I know. I'm just saying.
Okay.
I know.
I thought you didn't have a screen and you didn't see. Baba got hammered. Pindudu got hammered.
Yeah. No. Yeah. Baba took me down.
Yeah. Baidu got hammered.
Yeah. No. Baba slapped me silly on Friday, and I do not like it. Sam, I am.
Mm-hmm.
Yeah. No, that was kind of ugly. And
Bitcoin's keeping its head up also into.
Yeah, I really don't think it means anything yet. I'm trying to think about like what's going to be the next catalyst for digital assets. And I really think it's going to be like right now, I think everybody's just kind of like, the
Tasty coin.
Well, the Tasty coin could be the next catalyst, but I think it's going to be something bigger than that. And I still don't think that they've washed out. I don't think they've washed out Bitcoin.
Yeah.
I think it's got a washout coming.
Yeah.
But then I think, because I think we can.
Who cares what you think? We'll have Scott on Friday. He's our crypto
dump it.
He got Ethereum. Yeah. He got Ethereum under 1,000. It's 1,700. Who cares what you do?
Listen, to be fair, I
am being fair. I'm calling him as I see him.
He's such a bad trader. He couldn't even make the bad trader tour. Like he didn't even qualify. Okay. He'd have been the lead, except he didn't even qualify for the bad trader tour. He goes, how come I'm not on a bad trade? I go, because you're worse than bad.
There's no words for you.
Yeah. I always tell Scott, he hasn't made a winning trade since 2001.
He's not talking about me.
Did you bring us back some good treats from Door County up there in Wisconsin?
Oh yeah. You're going to be locked and loaded with cherry pies. They're still
Did
warm.
one fall? Did maybe Josh's fall on the floor?
They're still warm.
They're still warm.
No,
Yeah,
you guys are all sharing.
because they were in the rearview mirror, the window or something like that.
Something like that.
Sitting up there getting hot.
Something like that.
Uh-huh. But you got a lot of sun.
Oh yeah, I got a lot of sun.
That's good. That's good. You look good.
Yeah. No, I was out hanging out, getting a little color. That's it. Now I'm ready to go. I got a packed week. I'm ready to go. I don't know.
This move surprised you on Friday?
About 30 seconds here.
Not after, Amazon and Apple's numbers, but what surprised me is sometimes after Apple is up big and Amazon's up big, they might just like, that may be that may have been like you said, the top is in that.
Tesla had a run too. Go ahead. I'm sorry.
Yeah, Tesla was up 50. That sucked.
Yeah.
That sucked for me. But I kind of felt like, they might have blown their brains out on Friday. I mean, that's pretty much the end of the earnings cycle, right? All the major players.
Yeah, all the major players. I mean, you still have, stocks that you have positions in, I don't know if you have one at Caterpillar, you got Caterpillar pins, you got Uber. You've been talking a lot about that.
Those are, I'm small along all those. Not
you got your Baba on.
I have no idea why you
Wednesday.
did that. That's
annoying. I don't know how you can hurt Baba anymore, but the way it looks here, it hurt me on Friday. But more importantly, I think I thought the indexes. Oh, here we go.
Yeah, even the S&P's up around 3 or 4. Now they're up $1 and change.
Yeah, I think I'm a seller up around 35, 37. I wanted to sell some on Friday. I kind of missed it.
Well, you didn't miss anything since the high was 44 and we're 34. I mean, you didn't miss anything.
Yeah, that's true.
NASDAQ's up 8, Russell's unchanged, Dow's down 14, volatility in by 7 cents, 23.35, and bonds 143.20.
Yeah, the bonds are insane. I mean, I didn't get hurt in the bonds, but the bonds are wow. I don't know what to say at 143 and at 143.20 or 144. It doesn't, it's so funny. Fed raises rates, bond yields go straight down in the crapper.
Yes.
I mean, you can't even make that stuff up,
No, you can't. Can't.
So
everything's going low except the 2. The 2's going lower relative, but it's still higher than it should be, in my opinion.
Yeah.
You got oil down 40 cents and gold flirting with 1,800 soon. Gold had a big move too.
Yeah, crude oil had a huge reversal in the afternoon. Let me just see my crude oil position. Yeah, crude oil had a big reversal. It looked like it was up. I saw it up almost $5 in the morning, and then I saw it just turn around.
It traded over 101, almost up to 102.
Yeah. I got to roll down some calls in crude oil, but
you got your hood coming out on Wednesday. Also, just to go back to the earnings for a quick second, and then you got your lift, which you talk a lot about. And does anybody are the apes still holding AMC? Just curious. Are they still doing that kind of thing?
Yes, they are.
AMC?
Yeah, they still doing that. I mean, are they still holding?
I have no clue. I haven't traded AMC in probably all year. I mean, it hasn't done anything. It's been trading.
No.
Yeah.
Just curious.
No, I don't think much. I mean, after Friday's rally, I would think that that was a pretty violent rally. I think they might have blown their brains out on Friday afternoon.
No, it seems so obvious. I hope you're right. I have a little bit of short delta. I'm not very happy with it right now.
I have a tiny bit of short delta too, but I have it for such crappy prices that it doesn't
matter.
It doesn't really matter.
That's funny.
Yeah, I don't think it's going to be very helpful. No, I don't think it's going to be very helpful at all. Let's see what happens in the morning. I would rather they open up and fall from higher prices than open down. And then we're all going to look at each other like, all right, now what? We're going to sell.
What? Yeah.
I don't think so.
Yeah. Yes, you're right. Everybody's right. I'm not. Nobody won the Mega Millions, although the winning ticket was basically in my backyard, a town or two over. We won $6. I rolled it.
I'm surprised we won $6. I think that's
I'm surprised you won anything because you didn't pay anything. Okay, let's just put in perspective here. There was two $100 bills that came out of somebody's pocket. Nothing came out of yours.
I didn't get the invoice.
So I'm surprised. You should be real surprised. Matter of fact, if that was my winning ticket, you were really going to test my friendship. Okay.
First of all, I didn't get the invoice. And
invoice.
And
Send
B,
it to Case. Send all invoices to Case.
And B, I would like my $2, my share of the winnings. And yeah, sure, just tell. No, just send me Venmo me how much I owe you.
Yeah, okay, sure.
Okay.
Very
right.
cute.
Other than that, wow, S&P's opened up a couple. Now they're down 10.
That's correct.
NASDAQ opened up a little bit. Now it's down 36. Maybe the top is
Russell's down 5 and Dow down 65.
Yeah.
Well, you know what? It's enough out of you. Unless you want to tell us about, you have pictures of anything from this weekend? Any good folk?
So we'll come back to those guys. And let's finish this one out here. Let me go back just a little bit.
Run out of control because once it reaches that price, it's too late. The market maker can't hedge in the past. They have to start hedging right away. And the only way to do that is to start buying those shares.
That's incorrect.
And
that's not the only way to hedge. Come on. Like, do a little bit of research. The only way to hedge is to buy shares. Bullshit.
I can't help but notice that there's quite a lot of popular at-the-money options that are coming, that are getting bought up by retail and institutions right now, with the current open interest sitting at around 4,760 for the August $15 calls, and the August 5th $14.50 calls sitting at an open interest of 3,284 contracts.
Wow, that's
a small
so
piece
many.
Of the pie, but I'm noticing that
that's
a lot.
So many. Oh my God. Not really. Let me come over here and look. That only fits the AMC narrative. That's right. So here's AMC. August 19th. Um, 15 strike, 5,000, 4,000, 4,800. The 20 has 17,000. Oh boy. And the 30 has 8,000. Okay. But once you get in the money, there's shit for open interest. What about this coming week? Oops. What about this coming week? Probably lower overall volume. Let's see here. What do we got? Then the following week, it's even lighter. I think if you come to, was it September? That September goes up to 50 and there's 21,000 there. That's cool. 16,000 at 20. October only goes up to 35 and there's shit for interest there. December, same deal. January, though, a little bit more, and it goes up to 145 still. But look at this. If you look at this, take a look at it. Look at this. Look at that. Go to a daily. This contract for 145 for January 23. Yeah, I don't know if this is the entire life of it. Let me make sure that it is. Yeah. Oh no. Okay. So these started trading in late May last year for $35 a piece, and they're currently at 21 cents, and that's the low. That's the lowest they've been. But notice the open interest. This blue line has been climbing, even as the price continues to go down. Super weird. Okay. But you got nothing like what you had last May and June in terms of the open interest for some of those calls that went heavily deep in the money, like the $30 and $40 calls or in early June. I mean, you're talking hundreds of thousands of open interest.
More
Nowhere
euphoria
close to
is
that.
hitting AMC recently, which indicates some bullish sentiment. I don't advocate for buying calls that are expiring every single Friday. I consider that to be extremely risky and, a bit reckless. But it's important to pay attention to the numbers because that is the exact same sort of event that preceded what happened with AMC back in May and June
Except, higher by a couple orders of magnitude. That's all.
2021. Massive buying
Jesus.
of near expiring at the money call contracts forced market makers to hedge their bets, purchase shares, and inevitably drove the price up well out of their control. Although I'm optimistic for AMC's earnings, typically what we see is the stock will start to head up leading into it and then drop down. If that happens, I won't be too upset, but I'll instead anticipate the move and hedge myself accordingly. But I will be looking forward to seeing how AMC performs going on into the future, maintaining this ascending trend line and bouncing off of these supporting lines, establishing higher lows every single week. And if that trend continues and AMC does indeed challenge its upper resistances and is able to break out from its current containment that it's been sitting in for the last 3 months, I look forward to seeing what it can do in the months to follow. As always, remember that this is not financial advice, and I'm not a financial advisor. I'm just an amateur investor who's looking to find some opportunity wherever it can be found. If you like this video and you like this type of content, be sure to give the video a like.
So, no, there is no short exempt squeeze signal. That no such thing exists, but it's a nice gimmick, I guess. It looks like that we're sliding lower here. Remember, this could obviously turn around at any point. It probably will. Probably end up going to all new highs tomorrow, right? Now, I don't necessarily believe that, but let's see. So here's Scavenger. This from one boring guy to another, but I think it's important to look at this shit because this guy. Anyway.
What's going on, guys? I wanted to jump in here. Probably my last video of the day, but who knows? I might come out with one later tonight. But I wanted to kind of highlight some key things in this video. Primarily focusing on the AMC earnings coming up on Thursday.
Oh, yes.
I'm very bullish on earnings, and not in the aspect of the...
Well, really? Oh, I'm so fucking surprised.
Right? I'm bullish on earnings due to the fact that hedge funds and banks betting against AMC are severely over leveraged at this point. And
what?
You have to look at, like, if you look at the pattern of what the narrative's been with AMC, it's that movie theaters are dead, right? Well, we can see now that, like, this year...
Is that the narrative? Are people actually saying that? Who's saying that? Who is saying that? I mean, that's what you're saying people are saying. And they certainly were not making any money in 2020 and 2021. maybe the narrative is that $40 is too high for this stock. Maybe it's that. Maybe it's not movie theaters are dead. Maybe it's that the stock is overvalued. And maybe it is.
For AMC is probably going to be the biggest year on record with this company.
What?
And you know, we're in third quarter now, and we're seeing that the numbers just year to date on revenue coming into the theaters is massive. We're already over $1 billion.
Yay.
And
how much of that do they keep?
Proving, you know, I'm not going to come out and say streaming services are dead, because they're not. But people still.
I hope you're not going to say that, because, you know, the NFL just came out with their own streaming service. There are new streaming services popping up all the time.
Experience sitting in a theater, right? You can have the best sound system and best TV you could buy in your living room, but the reality is you're not going to get the same experience.
Okay, so congratulations. You just proved that AMC and theaters in general are not dead. What does this have to do with you selling your AMC shares for $100,000 a piece? That's the question. Okay? This is not a binary thing. In other words, it's not the movie theaters are dead or you get rich from movie theater stock. That's just not how it is.
And people like to leave their house sometimes. It's a good date night. It's a good it's a good thing to do.
Convincing us that movie theaters are not dead again. So that's great. Okay.
And the proof is in the pudding, and streaming companies are seeing this also, that theaters aren't a dead cat. And the reality is that nobody can argue is AMC dominates the theater market. AMC is going to squash all the other theaters like the little cockroaches they are, and that's the truth. Like, I'm sorry if you don't want to hear that, but
no, Chilo,
the reality is I think streaming services are going to work hand in hand with, you know, AMC. You have a lot of Hollywood actors and, you know, movie stars that honestly are pissed off over streaming services because they're not making as much anymore, right? They're not making the revenue they used to when you don't put the shit in the theaters, because the streaming service can only pay so much money based off of their, you know, annual subscription, you know, payment. So they're only making so much money on something. Theaters, you can have a, you know, $1.3 billion fucking box office, and that money go, like, look at Tom Cruise with Top Gun on the movie that just came out. Like, the reality is you just make more money with theaters showing the movie and over streaming services showing the money, or not showing the money, showing the movie.
Right.
So I'm bullish on earnings only because that's going to prove out what we've been talking about for the past year. We need a cash positive earnings, and we need to show that we're breaking records. And that's going to follow up with hedge funds
breaking records,
even more,
as in,
know, they've probably been convincing their
from
investors
the last 2 years.
Oh, just wait, like, reality is going to sink in. People are just going to the movies because they've been locked in for COVID. But this earnings specifically is going to show investors that
he froze up. His video froze up there.
Invested into hedge funds and over leveraged Wall Street cocksucking banks that the theaters are back, and there's nothing anybody can do about that. They were on the wrong end of a trade, and you know, it sucks to fucking suck. You look at the big banks that are betting against AMC, you know, Goldman Sachs, JP Morgan, Morgan Stanley. These are people who are using, like, they've been caught using their clients' money. So your money's sitting in Bank of America right now, using that money to short AMC. Like, they're literally using your own ammunition against you.
Where do you get that from?
So take that how you want to take it, but the reality is they're fucked. And for the people that say they're not going to get a bailout by the government, you're wrong, because the bailout is the only way. There's no other way this goes on. There, you can say I'm not going to bail you fuckers out, but at the end of the day, they will get bailed out. Mark my words on that.
Oh, your words have been marked.
Happen, so there's just no other way.
But see, the difference is this time, the bailout money is going to go to the little guy, right? They're going to get bailed out because they have to pay these apes, and they're not going to be able to do it, so they're going to have to get bailed out. So the bailout money is going to the little guy this time. It's the first time in history ever.
You know, it's there's the banks don't have the fucking money to cover this. So
They don't have the money to cover it, even though it requires collateral to short stocks and you receive a credit for selling them, but they don't have the money to cover. Where the fuck do you get this shit
don't have
from?
the money for fucking anything. You can go, if someone's got $100,000 in the bank, you think they could go fucking withdraw their 100,000? No, they're gonna
Yes.
flag you at 25,000 and do all this other bullshit. Like, they don't have the fucking money.
Straw man.
They do in, you know, fake money. That's
Fake money.
You need a $300,000 house mortgage.
This is, guys, the everything conspiracist right here. Markets, money, everything. Everything's fake.
Here you go. Like, we'll just create $300,000, but and digital assets, right? They have all the digital assets they need, but for hard liquidity, hard cash, they don't have that. They're gonna need a bailout. No other way around it. Peace.
What an idiot. Netflix has seen a loss in customer base over the last 2 quarters, and cable services said that last quarter many have seen a reduction in customer base. So now everyone is going to AMC now. What the hell, right? And yeah, Netflix is they have to go to an ad revenue model because you know, how many, I don't even know how much it is, but it used to be $10. How many $10 a month subscriptions can you sell? And you're spending all this money on studios and production and stuff, and you have a flat rate. So you have to have continual growth in your subscriber numbers, which has been going down. It's a bad business model. They overextended themselves because of free money, I'm sure, or low-cost loans. Yeah, it's a mess. It is definitely a mess. But, you know, to Model 3 dude's point here, I don't think, you know, I agree. I don't think that, you know, people are canceling Netflix, canceling their cable subscriptions, but are going to the theater more. Doesn't make sense. Probably not. I mean, it's possible, but they're going to the theater more than they were when theaters were not open because of the pandemic. So your Netflix bill is $19.99 per month. They just raised that. Was that just raised to that? I don't know. And a lot of people have more than one streaming service too. Let's look at stimulate and trade. It's an actual longer video from this clown. Let's see what he's got to say, because he's usually pretty terrible. This is the content we live for, so it must be super bullish. Must be. Missed you. Been missing these videos. Make no mistake, we are in an economic downfall. Quote me on this. Meme stocks will soar. Okay. Buck Fiden. Okay. Hey guys.
Hey guys. All content discussed in this channel is due diligence gathered with aim at better understanding the nature of the current market in anticipation of the greatest squeeze in financial history. Let's dive in. They called us lunatics, hyperbolic and exaggerated when we began touting the word recession months ago, as far back as 2021, and yet here we are now. This past week was absolutely horrendous, giving us a
So
start.
the apes are the only group of people who predicted that there would be a recession. Wow, you were right about that. You must be right about everything.
Stark reality check by which all economic data is bad. White House officials are working overtime to assure us that we aren't in a recession, going as far as suggesting the definition of recession is wrong.
I don't know why I'm even changing the quality, but so did the price double, Model 3 dude? Like, because I know it used to be $9.99. And So you're saying 20. Do they have different levels? Like, I don't even know. I have signed in to I have a profile on my mother's account, but
Earnings were both bad, though because they weren't terrible, we began bouncing up. The situation in China worsened, the housing market worsened, inflation continues to be high, and yet, in the midst of all this, stocks are running up, trying to rally with the media touting that they are oversold. There are two main camps of thought. One is that this bull rally makes sense. Though the economy is worsening in many respects, many believe that the worst has already happened and that from here on out it's all an upside. They believe the next CPI data will come lower and that if
well, that was a mistake. That was a mistake. The level you're on. Okay, I gotcha. Remember when they used to send DVDs in the mail? That's what Netflix was. Wild. Okay.
this continues to happen over and over, the Fed
Jesus Christ. Okay. Come on now.
will begin to lower the rates, which will be followed by a huge bull rally that will uplift all stocks, and we could potentially reach new record highs sometime next year. On the other hand, there are those like me, who believe this rally to be questionable in all respects. You see, I am going to take more psychological standpoint in regards to explaining why we are rallying up.
Okay.
In 2020, when the economy was coming
Sweet.
to a screeching halt and stocks plummeted, the United States government issued policy to isolate the stock market from the pain of reality. While people became unemployed, the Fed made it easy to give everyone cash. Stocks went up on the biggest rally in history, and people at a psychological level began to believe that no matter what happens, stock will go up because they can only go up. That is where you get all these funny memes with Jerome Powell printing cash and the saying stonks only go up.
Right. Okay. Just pausing it to let this load here. It pop over here. See things continuing to slide down, and my personal sense is probably this week is probably a down week. It's probably a red week. Just based on what has happened. But, you know, who knows? Of course, opening lower would imply that it's going to pop up. Of course, it could reverse and go up higher and then, you know, gap up and then crap down. So who knows? You can't predict it at all. But I think that'll be.
We began to see bad stocks go on bullish runs because money was flowing all around. There was really no risk, and a large portion of would be risky investments because all companies had to do was file some paperwork and the government would see to fund them ridiculous amounts of stimulus money. This had a significant psychological effect on investor psychology because it shifted the manner by which we carry risk assessment strategy. No longer do negative world events matter, stocks go up. What if the economy flips and millions lose their jobs? Doesn't matter. Buy the dip because stocks will go up. What happens if we face a new pandemic like global events such as the new monkeypox? Load up on stocks because they will only go up. What if we go into a recession that could last years? Well, you better take a loan and load up on stocks because they will go up. This is the mentality, the investment approach by which investors are seemingly going by when looking at the stock market. It isn't about getting on the right investment, it's about getting in on as much as possible because things will and can only go up, and this is a very flawed and dangerous logic.
What is he talking about?
You see, the very things that made the stock market so resilient during an economic recession are no longer viable long term. The policies of free easy money for all companies and extremely low rates are no longer a suitable economic policy that can be upheld in the current state of things.
Oh.
As such, Investing the same risk-free way in which we did back in 2020 is no longer sound in my opinion. When I look at the awful GDP figures, high interest rates, high inflation and expectation of worse things to come, I cannot help.
This seems to be just basically following the basic narrative, right? Stocks only go up. Rocket ship.
But see this current market rally being the result of investors not willing to adapt themselves to the new changes. I think big money too is helping usher and pave the way upwards only to strangle retail out of money before things come back down. You have to remember, one of the best strategies big money uses is to wait for retail to pretty much all align.
I mean, it could be a bear market rally. We've seen them before. Some of the most violent rallies that, happen during bear markets. You get short covering and repositioning and things like that. So that's why I say I think that we're going to see. Oh yeah, it is definitely a synthesized voice. Apparently one time he used his real voice and everybody said, go back to the synthesized voice. They didn't like his real voice, which that's, that's hilarious. Apparently there is one video where he uses his real voice. I haven't been able to find it, but I haven't looked. I don't know. Maybe Manny knows it. Because he's like the media expert here. But yeah, it's definitely
in one side of the trade, bullish or bearish. After that, big money has no problem manipulating stock value to capitalize on this bullish sentiment and then trap people in it and have stocks move the opposite way. People are blaming misinterpretation of algorithms as the result of the rally, but I honestly think both big money helped push stocks down, and once the news came out, they quickly went to work and pulled the reverse Uno card and made stocks go up.
The reverse Uno
This caught a whole bunch of option trades off balance, especially ones playing options, and made a vast amount of their holdings become worthless in less than 3 days.
If you
Let
look,
it no
if
go
you
unheard.
look at the,
These are very miserable times we are living in. The GDP.
If you look at the trades on the Qs for Friday and the options, you can see that there were 1.7 million puts and 1.3 million calls. So that's a ratio of 1.2 put call ratio. So overall bearish sentiment. What did the market do? It went up. So this is an example of, a contrarian indicator. So everybody was bullish, everybody was bearish, but the market went up. So, I don't know. I don't know. Like, he's making so many assumptions here and attributing things like directly to things, and you just can't do that. It's just not really how it works.
Fell 0.9% in the second quarter, marking perhaps the biggest signal for a recession. I don't care what the new redefined out of convenience definition for recession the White House wants to tell us, this is not good at all. Even if the CPI data comes out lower than the previous month, it will not be by a significant enough manner that will undo the terrible circumstances by which every low and middle class citizen struggles, and I want to touch on this now a bit more because a lot of FUD is coming from both the government and analysts regarding consumer spending.
Okay.
Even as bad as things are, officials in Wall Street and Washington, D.C. are telling people to remain bullish because people are going out and spending. They are touting summer and people wanting to go out as well, and will display some BS statistics showing people are spending money. Remember, our economy is all based on growth, which happens by getting people to spend. The moment people stop spending, the economy quickly contracts, we enter a recession. The problem with the rhetoric that people are still spending a lot of cash is that even though this is true, the spending is quickly shifting away from good and into services. Funny enough, this too was also something that happened prior to 2008. A key difference is that the rest of the world is also dealing with a recession, so the dollar should retain a lot of its strength by comparison. Now, another thing I need you guys to understand is that every recession is different. The 2000 dot-com bubble recession was different from the 2008 subprime recessions.
Oh, shit.
Every
Really?
recession has its own unique characteristic that makes it stand apart from the rest, and I think the current one will be because of quantitative easing. The government had terrible policies that lasted too long, and now the damage is done. I still think the Fed is incorrectly managing the situation, and because of that, the longer they continue to kick down the can instead of letting things crash, the worse the upcoming recession will be, which is something I have voiced many.
Well, Ken Fisher says that that the Fed is reactive to the market. In other words, the Fed follows the market, not the other way around. And I would trust him more than this guy, whose voice I've never even actually heard. Model 3 dude remembers when he used his voice, and you're right, people went crazy. That's so funny. It's ridiculous.
Times in the past. Right now, supply chains are strained and the war in Ukraine has made energy prices go out of control, but we are slowly adapting and making changes to combat these, and as a result, I don't think the recession coming will be as awful as the one in 2008, but it will still be bad. So now, let us
Okay.
approach the question of why we stocks are going up from a very different angle. Based on bond market data, you can easily see they expect a recession as early as
Based, okay, this is interesting.
of why we stocks are going up from a very different angle. Based on bond market data, you can easily see they expect a recession as early as 2023, which is why this year data is being touted as where things will fall in the media. The bond market has priced it in, but the problem is that the stock market hasn't for the psychological reasons I explained earlier. If inflation brings up nominal values, we are still going to see earnings stay flat.
What is he talking about? Yields are down. Bond yields are down. Like what the
This
fuck
is
is
funny,
he talking
because in both
about?
previous recessions, with the dot-com
I'm sorry, I can't. I don't think anybody is going to mind it. I can't do this. It's stupid. It's too stupid. Let's get to something good here. Fuck all this. Let's go over here real quick and take a look at the market kind of about, flattening out a little bit, it looks like. But I want some drama. Let's get some drama in here. We need some drama up in this bitch. All these low energy 6 guys. Okay, so this is from yesterday.
I mean, what's up? This is Frank. Let me say I'm not a financial advisor. Anything that I say in this video is for
But
entertainment
that's not
purposes
the one I
only.
wanted, though, actually. I want the drama one. Take it down. I was watching this Friday afternoon in the car. Almost wrecked. Where is it? He must have taken it down. Response to... Huh. I guess he did. Shit. Well, probably a smart move.
Only whatever I say in this video is my opinion. It may not necessarily be factual.
Necessarily. May not necessarily be.
Don't let what I say in this video be the determining factor as to whether you should hold a stock, sell a stock, or buy a stock. I'm not a financial advisor. Look, man, when it comes to our short squeeze play, we're trying to take trillions of dollars from billionaires. So when you do that, it requires a certain...
You're trying to take trillions of dollars from billionaires. If they're billionaires, they only have billions. So how are you going to get... I don't...
type of loyalty. And if you don't have that type of loyalty, they'll tear you apart because of the type of people that we're dealing with. We're going up against, man, some of the most powerful individuals that any financial system has to offer in our short squeeze play. So technically, we're at war. And you don't take trillions of, and the reason why I say we're at war, you don't take trillions of dollars from billionaires and they don't spend billions of dollars trying to fight you unless you're at war. So we at war. You see what I'm saying? So in this short squeeze play, loyalty is everything. So in our war, you got the AMC family on one side.
So now
and
you're
on
in
the
a
other
war.
side,
So now you're in a fucking war. Okay. Great. Al from Karachi Beach has already made all these analogies. Yeah, I think Frankie deleted the video about socialism. It seems like he did. I see that the ape father responded or weighed in on the controversy last night. We'll check him out in a minute.
you got Wall Street and everybody to attach to Wall Street, their family. So you got their family and you got our family. And if you've seen, man, Godfather before,
Oh, yeah, I've seen
there's
it.
a popular scene, man, you know, when it comes to Godfather that, you know, everybody know about.
Sleep with the
When
fishes.
Michael Corleone was talking to his little brother Fredo, you know, and Michael was trying to do some type of negotiation with somebody that Fredo knew, you know, and him and the guy that Fredo knew, his little brother, him and Mike weren't seeing eye to eye. So Fredo spoke out of turn. So Mike told Fredo, man, you my little brother and I love you, but never take sides against the family. You see what I'm saying? That's the same thing, man, when it comes to our AMC short squeeze play. You know, if you got somebody in the community and they putting out content, they putting out DD, and they putting out information, and they putting the information out there to try to bring down hedge funds and short sellers. They trying to deal with the criminal activity in the stock market. They trying to deal with the stock market manipulation. They trying to make sure that the AMC family, the apes, the retail investors maintain a competitive advantage over hedge funds.
Yeah, that's why they're doing it. It's not to get rid. It's not to make money off of YouTube views or anything like that.
And they stay on top. And then if you have somebody, you know, in our community, every time people in the community put that type of content out, if you got somebody constantly criticizing them when they put the content out, critiquing them when they put the content out, for some people, man, they can be intimidating, and they can cause them, man, not to want to DD, not to want to do the DD and put the information.
So no criticism. Don't criticize it. Well, sorry, bud.
Now,
ain't gonna happen.
So if they constantly being criticized by
constantly being criticized
somebody, man, in our community, that person in the community, man, that's constantly criticizing and critiquing them, man, they doing a lot of harm to the play when they consistently attacking them.
Sorry.
You see what I'm saying? Now, the person could be, it could be me. It's not directed toward no particular individual. It could be me. Now, the person could be doing it because it's an ego problem, or they can be doing it, man, because they don't have unconditional loyalty for the play. It can be intentional, or it can be unintentional. It doesn't matter. Regardless of what the reason is, it's harmful and dangerous to the short squeeze play.
Or
you see what I'm saying?
It could be that there's misinformation and they're trying to correct it. How about that? That never crosses these people's minds. That's not a possibility. He is not acknowledging any possibility that he's wrong. And that is fucking stupid. I'm sorry. That is dumb. That is ridiculous. All right.
The thing is, man, people in the community, they are not stupid.
Oh. Oh, okay.
If you playing games with the short squeeze play, or you trying to play both sides in the short squeeze play, if you all over the place, man, you're not being consistent when it comes to our short squeeze play, man, people can see that. You see what I'm saying? They know when you're doing it. Some people say something, some people might not say something. But just because people don't say something, it don't mean, man, that they don't see it. A prime example. Let's say Al from Boston, right? If you look at Al from Boston, since when he first...
he has all of the hallmarks of being a shill. Is that what you're going to say?
Got here. When he came back now, his message is consistent. He hasn't changed. Regardless of how people feel about him, Al from Boston is consistent with his message. If you look at Ape Nation
Consistently
Will,
wrong.
he's consistent with his message. If you look at Phil for Real, he's consistent with his message. People might not, I try to be consistent. People might not like you when you're consistent, man, but they respect the mere fact that you being consistent and you got conviction what you say you believe in.
Or they think you're an idiot for not actually looking at the data and changing your opinion based on what's happening. So there's that. But
AB Investment, man, he's consistent
Jesus.
with what he believes in. You see what I'm saying? Massalorian. I remember when Massalorian first got started. And sometimes, man, you know, he critiqued a certain person in our community. A lot of people, man, they didn't like that. They was hitting them in the comments. But he didn't let that prevent him from speaking his mind, man. He was consistent with what he believed in. They're not these people, man, they're not all
Doesn't
over
make
the
it
place.
true.
You see what I'm saying? And us being all over the place is what got us in the situation that we in right now as far as trying to get paid for this short squeeze play. Look at it, man, how in the beginning, you know, how we felt about how much money we can make per share in this short squeeze play. Then some point we got to the point to where, man, we want to sell in the lower hundreds. What happened with that? What happened was conviction and people not being consistent. Something had to happen to get us to the point to where we don't want to sell, man, in the 4 or 5 digits. We want to sell, man, in the lower hundreds. Somebody, man, had to plant that seed. You know, somebody had to introduce that idea. It just didn't happen overnight. So that's why I'm talking about the importance, man.
But somebody had to plant the false idea that you can sell your shares for $1.2 million a share also. So where did that come from? All of it mostly came from Reddit.
Of being consistent, you know, and the importance, man, of having conviction, man. And let me say this, man. The people on the other side, man, they ain't never cared about, you know, us, you know, as far as this short squeeze play. You know, we've had to fight like dogs. It's been a dog fight in order for us to win in this short squeeze play. You see what I'm saying? So if for some reason, you know, the people on the other side, man, I don't want this short squeeze play to pop off. And then when it pop off, somebody try to get us to believe that somebody on the other side, somebody on Wall Street really cared about us. Don't nobody care about us. It ain't no way, man, that you can say, man, that people on the other side, they're concerned with retail investors and what go on with retail investors. Nobody would have stood by a whole 1.5 to 2 years and watch us get robbed and watch our money being taken from us, you know, and then don't step in and don't say nothing about it. They can't care, because if you care, man, you wouldn't let that slide. So the thing is,
Well,
like I was saying, if this play squeeze, man,
again, I mean, the difference between caring and making a bad investment. I mean, in his eyes, there's nothing that could be a bad investment. But that's not true. It's just not true. Frankie, every thought you've had about AMC belongs to somebody else, pretty much.
Man, it'll be because, man, we've been in a dog fight and we've been through hell. And the play is running because we had to fight like hell to get the play to run. It ain't because, man, somebody looked at us, man, and they liked us, so they made a decision, man, to let the play run. It's a difference between the two. You see what I'm saying? So on the other side, man, they don't care nothing about us. And, man, in closing, in this short squeeze play, we've had people on the outside, we've had people on the inside to try to break us down. They've tried to destroy the A community, man, but none of them has been successful in trying to do that. And the reason why, man, they have not been successful is because, man, the AMC community. I mean,
Trey left.
Man,
Trey left.
Man, we got conviction in the company, we got conviction in the stock, and we got conviction in this short squeeze play. And we ain't gonna leave. We ain't going nowhere, man. We're gonna continue to down the hands until we see this thing through. Thank you for taking time out to watch the video. Have a nice day.
Well, believing doesn't make it true. Sorry. Okay. Here's Lou. I believe.
What's going on, my silly little motherfuckers? All right, listen, I'm gonna do this quick one for the haters because I'm about
Do this
to go
quick
sleep.
one for the haters.
And get some rest, but I wanted to burn their souls. My little pleasure before going to sleep. One, go fuck your mother. Two, you'll never be the man your mother was. And at the end of the day, all your little bot shit and the people that pay you, go fuck yourselves. You fucking people you're meaningless, you're worthless fucking pieces of fucking dogs. You motherfuckers have no worth in society. Nobody wants to be near you.
Is he talking about the apes in general here?
The only guy you can date is the motherfucker in the mirror. Look, hit all you want. I don't give a fuck. You're the one that's all there angry, like, I'm gonna kill Lou. Fuck you and your Payless shoes and your fucking car that has fucking different fucking panels on it for motherfucking dents that fucking that happened to that car since you bought it in '97. Look, I'm sorry your sister's a slut and your mother's a fat pig. I'm sorry nobody will ever remember your name and you're worthless and your time on Earth was a complete fucking waste
Classic
of time.
Lou, huh?
And you're not even a real fucking man. Men, whatever the fuck you are out there. Because that keyboard shit, you motherfuckers never did. Like the guy in the park spitting on the floor. I'm looking at him like, dog, come pick up your spit. He's one of these guys like, he's acting like his girlfriend's stopping him like, I'll fucking pull your head off your body. I'll just look at him like, dog, you have no idea. Emergency rooms, they were made for motherfuckers like you. So, all I'm saying this way, all the stupid bots that you're seeing popping up, you know, motherfuckers, what's happening. The ones that are paid off by the other side, yeah, go fuck your mother. Listen, I'm having a blast because I know you motherfuckers are melting. And for the haters that are just out there like, fuck him. The ones that are racist also, listen, go fuck yourself. I enjoy being Puerto Rican. We're a unique species. Go fuck your mother. That's all I can say. You know, you sandal-wearing motherfuckers. So, that's it. I wish you a good night. But since you sleep with 50 men, I don't want to have nothing to do with that. So, burn in hell, motherfuckers, because you're never gonna come nowhere near this big giant heart. For the one, we don't know if you know you own shares. I'm like, dog, if I didn't own shares in AMC, the entire fucking Wall Street and AA would already outed me. Motherfuckers are so stupid. Wow. That's why your wife fucks everybody in the zip code. Ugh, you don't have a wife. You do rent the sex. You go home and fucking masturbate like that and think somebody loves you.
That was a good
Fuck
one.
you motherfuckers. Good night. And I will see you motherfuckers tomorrow.
Yeah, from the beginning, he was very sensitive about the haters. He, you know, and comments were always like, just ignore the haters, just ignore the haters, and he couldn't do it. He can't do it. But yeah, a lot of the comments on his videos have turned negative now. It's interesting. Da, 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 da. Oh yeah. Oh yeah. Thanks, Manny, for sending this video. That's right. I totally forgot about this one. Verification. So there's also been this criticism of the Kansas 5.
Introducing the Kansas 5. They all told us to hold. This wasn't the squeeze. And they sold. We all know they did. Listen, get the weight off your chest, Trey. Go ahead. Y'all help us hire Wes Christian. There's already money in the till from the last
Hey, Lord.
fundraising ordeal. I think he's got $11,000. We need Wes Christian to help prove the synthetics. CSI made a video saying the same thing. I agree with him 100%. Everybody's hold. This ain't the squeeze. And most of us held, and lost $72,000. Now you're teaching everybody with your $69.99 come and trade with us, trade your A. Why don't you sell that truck you were going to give away and hire Wes Christian?
Wes Christian. Right. Nothing had changed. Shorts have not closed. Damn, you got banned from Kevin's. I love how they go through these periods of like who is the hot commodity. Right now it's Kevin. Kevin. Catherine O'Hara. Home Alone. Yes, Kevin. Now Kevin is the new market oracle. Used to be Lou. At one time it was Lou. Kevin's a little griping baby bitch. He blocked me because I knew that he knew about the private offering on TBLT hours before he did his live stream that morning and told nobody. So go listen to him all you want. Why he blocked me, ask him. It was for asking that question. So he knew, apparently, that TBLT was going to offer more shares. He knew it. And he did a live stream and didn't disclose it. And people got fucked, apparently. I don't know. That's what I'm reading into there. Maybe somebody knows more. Also, by the way, the voice chat's open. Lord, if you want to pop in, or anybody, feel free. Over in Telegram. Let's see. Win Wes Christian. Manny. He's the savior. We need him, Wes. The Kansas City 5. Kansas 5. So he's got end of AMC. AMC SmackDown. I think this could be it. Could be the one that I'm thinking of here.
What's going on, my silly little motherfuckers?
Okay.
All right, listen. Doing this video because people were emailing me. Apparently, in the video I did earlier today, I said I referred to a lot of family members as kids, and then I used it in the context of, you try to fuck over the kids or something like that. And I think somebody said it was disrespectful. I don't know who said it, whatever. Somebody's telling me that somebody got their feelings hurt. Let me say something. When I refer to people as kids in this, it's because the people don't have the experience in this world. And this world is not we buy, we hold, and we chant on YouTube. That's not what I'm talking about. I'm talking about that world. I've been in that world for a long time in my life, enough to one day just say, you know what, I'm done with that world, and I left it. From the pit to the boutique firms to the fucking...
He was a pit trader?
All through Midtown, through
really?
Everybody, all the names, the Amex, the UBS, the fucking Morgans, the Bear, the Lehman. I've been through them all. I put together fucking $1 million deals. I've gotten compensated fucking crazy throughout the lifetime that I had on the street. Done shit all around the world. I know that world. I also know Silicon Valley. I put together the technology that we've been fighting. Why? Because the first phase of it was in the Mexican Stock Exchange. So I have an insight into that world. So when I talk about like protecting the kids, like the people, you know, within the family, you have to understand that is like a term of endearment, like you are my people. So instead of saying my people, like since you guys, you know, don't have experience in that world, it's just one of these things that came up, like, you know, the kids. Just because one, at a certain age, and a lot of people here, the age demographics are like 18, 20, 25, 27. There are people that are older, but a majority of a lot of the people in AMC are younger than me. They could be my kid. So when I say that, it's just because when I came up, people took me under their wing and they taught me things along the way. I didn't know, so they taught me. So it was one of those things. So somebody today, on a day that we cost that side a lot of money, and we heard them going into next week, specifically because there's certain things that we're doing to be able to afford this play that doesn't work for them anymore, thanks to Powell. And then next week, the reality of a lot of firms are deciding that adding more capital to hold their positions because of those margin calls is pointless, and they'd rather take their chances fighting it out with us on a climb. That's good fucking news. That's great fucking news, because that means this is coming to an end, because they can't afford to hold it anymore, and they feel that they can face us, and you're desperate enough in order to get the numbers that they more or less can manage. Now, as far as the people or person or whatever that got offended by me calling people kids out of it, like, because technically, like, kids like
Frankie Mohammed,
my family, like, I technically love you motherfuckers because we have a blast together.
I technically love you.
People get upset with that. Remember something, I've never asked anybody to subscribe, to follow, or anything. But more on top of that, I just want to say something, and this is gonna like go straight to the heart. And somebody told me today, some sweet person told me, don't do it, Lou, don't. Unfortunately, the people that got offended when I said kids and took it as a form of disrespect when it was a term of endearment, like me looking out for my kids, my people, all I can say is, go fuck your mother. One, I'm not that motherfucker. Two, I'm a grown fucking man. I say whatever the fuck I want to say. Your name is not on my bank account. I don't fucking know you. We ain't fucking friends. And at the end of the day, if you feel offended or you feel disrespected, go hug a man and catch the monkey. Because at the end of the day, I don't give two fucks. I got my money in this play and in other things in life. I'm here to make money. I'm here to see if I can help people.
Gotta agree with Lou on this one.
And protect themselves going forward. That's what we do here, okay? That's why at the end of the day, I don't take the super chat. I don't take the brand sponsorships. I don't do the private memberships. I don't do anything. Because I see all you motherfuckers, like the gremlins, like part of my fucking little team. And it's fucking cool because I'm forming like a giant gang. So when I say, you fuck with the kids or my kids or whatever, and in conversation with everybody I talk to, is like, yeah, the other side wants to, fuck with the kids. And I always say all the time that the kids are going to fuck them up. They have no idea that these kids have learned. They've learned. So I'm looking
This
at
is
a
where
point
I
of
start to
people who are
disagree, but
experiencing that world. That's exactly how the people on that side, I refer to them as nefarious motherfuckers. Why? In this world, whenever I used to have conversations, and I came across somebody that had money, was looking to move money, whatever, and I used to be like, oh, who's the fucking guy? You know, and then people used to tell me like, oh, he used to work over here, he used to work at Goldman, or he used to whatever. I'm like, oh, he's one of those nefarious motherfuckers. So I knew he was a street guy. But the situation where it was people outside the market, I'm like, hey, he's a fucking kid, doesn't have experience in this world. Like in Silicon Valley, I used to have a lot of fucking rich people that wanted to put money in Silicon Valley investments, and they had no fucking idea what they were doing. They just had money. Like I'll give you an example. Like, where the fuck did we have one time?
All right. He's just rambling on about bullshit now. All right. So let's check this out here. Make or break week, TMI, and short the VIX. The misinformed investor and short the VIX. Together. 2 grifters for the price of 1. Sweet. Any day now. Okay. Also, all the FUD about Citadel losing a lawsuit. Citadel lost a lawsuit against IEX. They're going to lose so much money. They lost.
Why is it the White House officials are trying to redefine recession?
No, we're not redefining recession.
If we all understand a recession to be 2 consecutive quarters of negative GDP growth in a row, and then you have White House officials come up here to say, no, that's not what a recession is. It's something else. How is that not redefining recession?
Because that's not.
Because that's not. Speaking of kids, by the way, speaking of kids, here we go. 2 of them.
That's not what a recession is. It's something else. How is that not redefining recession?
Because that's not the definition. That is not the definition.
Brian Deese said in 2008, of course, economists have a technical definition, which is of a recession, which is 2 consecutive quarters of negative growth.
I can tell you this.
Yesterday said 2 negative quarters of GDP growth is not the technical definition of a recession.
It is
What
not.
changed?
It is not.
Why did he say that
it
was?
is not. I can speak to what he said yesterday in front of all of you, which is the last thing that you just repeated. There are many factors. There are many factors, economic factors and indicators to consider, and I will say that the textbook definition of recession is not 2 negative quarters of GDP. We have a strong labor market.
He's getting a kick out of this. Oh, wow. Look at that young, bright, smiling face.
We have
so
business
cute.
that's investing.
What did they say he looked like? He looked like I don't remember. It looks like we got another future bald dude though. Somebody slammed me in a comment for making fun of these guys. Do you have anything to offer, or you just sit there and make fun of these guys? And I told him, go fuck your mother. Go fuck your mother. Shart the dicks.
We have consumers that are also very much, in investing.
He doesn't do that anymore, Model 3 dude. What's going on, guys? What's going on, guys? Welcome back to another video. He doesn't do it anymore now that he's on camera.
Purchasing. That is incredibly important. We have 3.6 unemployment. You do not see that in a pre-recession, and you do not see that in a recession. So the factors that we are seeing right now, the economic indicators.
Whoa. Wait. She said you don't see that in a pre-recession and you don't see that in a recession. So they don't even think we're getting close to seeing a recession. Not even that we're not in one.
They're just like, nah, it's fine. Let it go. They're like, no. Oh, no, don't even. No, we got midterms coming up. Oh, no, we're gonna be fine. No recession.
Yeah.
Everything's
Oh
good.
my God. All right. Let's of course let's let her finish. Let's let her finish.
Yeah,
we don't know what she's gonna say at the end. Yeah.
Does not show that we're in recession. And I'll read, since you gave me some quotes, I'll give you some as well. In 2009, the St. Louis Fed said, while the popular definition of recession is 2 consecutive quarters of negative real growth, domestic product GDP growth, the NBER, which we have mentioned many times in this room, does not strictly abide by this designation. Instead, the committee broadly defines a recession as a significant decline in economic activity spreading across the economy, lasting more than a few months. NBER has been around since 1920. I'm going to move on.
She's gonna move on. Man, oh man, oh man. Well, hey,
dude,
we're not in a recession apparently.
Apparently not. We just like to sprinkle some nice things in there. Be like, oh, the technical definite. The other thing there too, which was interesting, is you kind of heard her flip flop. She goes, the reporter asks her, oh, is this the technical definition? And she's like, that's not.
Okay, letting it buffer a little bit. Come over here. See that things have calmed down, and now it's boring again. So VIX is elevated. VIX futures are elevated a little bit. But beyond that, it's see, it looks like it's starting to spin around here. All right.
Not the definition. And then she reads the quote from the Fed that says, even though the technical definition of a recession is this. And it's like, okay, so it is the.
No, that's not what she said at all. She didn't say the technical definition, but
technical
anyway,
definition.
whatever.
You just are refusing to acknowledge it at this point.
She okay, in my opinion, I don't know this, but I think we can all see it. She has some strict instructions going out there, and they're just like, avoid accepting the fact that you're in a recession by all costs. And she's like, what? And they're like, avoid.
That's not what strict construction is. But I love how they hear terms and then they use them. So funny.
Accepting the fact that they're in a recession. And she's like, but we're in it. And they're like, don't you dare say it. Don't you dare say it.
Deny.
Exactly. What's going on, man? How you doing?
Not much, man. How you doing? You having a good weekend?
Yeah, so far so chill. I mean, it's better than the economy is doing right now. But
yeah, very true.
We'll see what happens later on this week. We have quite the bullish market ahead of us. Last week was interesting. Crazy. Looking at the market. We saw what do we have? We had Apple, Amazon,
quite the bullish
Microsoft,
market ahead of us.
At earnings, they all did.
But then he just said the economy was not doing. He's doing better than the economy is. What the fuck?
Microsoft earnings honestly didn't even do that well. The outlook was
nice.
They
missed, and then they were like, the guidance is going to be okay, and then the market started to rally off of it. It was like, I guess this is what we're doing. It was like kind of another nonsense week of rallying. You got that little cross up on the SPY, I believe, on the daily, which is a little spicy.
That part was the best. I mean, personally, when I looked up, the earnings for Microsoft and I saw that it was running the next day, I was just like, hold on a second. We got it running the next day, up 5% in the after hours after a miss. I was just like, this is not making too much sense. But when you do look at the overall SPY, let me see if I can pull it up here with us in the side there. Perfect. When you do look at the overall SPY and we got that cross up, I'm like, what this cross means. And you can kind of see the cross coming from earlier in the week when we kind of just ran up over the 48. We just kind of chilled, bounced back off the 13. I was just like, uh-oh.
Look
Fuck,
at the
I
if
was
you
muted.
zoom out a little bit,
God
look
damn
at
it.
the look at the last.
I agree. His name, TMI. Maybe it's maskless investor now, or the misinformed investor. He needs to change it. It's false advertising. Call Wes Christian. Somebody needs to sue this guy's
time that it crossed.
pants off here. Fucking mute.
Up here.
Steve, go way back in like
yeah,
April,
that was
I
back
think.
in March 28th.
Yeah, March. It just came down, never crossed back up. So if we can get above that 200 EMA, I mean, you could be in for a little bit of a rally, but you never know. I mean, there's money flowing back in. I think there was something in Powell's speech. Remember last weekend we were talking about the 2023 rate cuts, that some of the things that Powell was talking about were kind of giving institutional money a little bit of a light at the end of the tunnel, that they're not really giving guidance, but they're kind of going off of eventually we are going to be decreasing the amount that we're raising rates by, which is what I really think the market kind of like was hooked on.
Needed.
And then just ripped.
Yeah.
What did we close at? Like 411, something like that?
Yeah, what do we got? 411.99, up 1.4% on a Friday. Even the last days here, we saw it dip down, ending July 26th at 390, and then over the last 3 days, we saw the market rally 5.7%.
That's a lot, man.
The SPY was up $21 at the end of 3 days.
Oh my god!
Seems like they're just at like 372.
It was nuts. It's nuts. And now the biggest thing that I'm looking out for, honestly, just from a technical perspective, is that 417, 418 level. Like that's right above. I'm just trying to see where you are now.
That's right where that consolidation period was before we dropped hard out of it.
And that was the last time. So even if we were to draw out a little support and resistance level, we have these already highlighted on the chart. But
yeah,
like this zone is going to be interesting. It's either going to be make or break. If we break above it, we could fly. If we get rejected from it, it's coming down. 380.
I've been looking at every single time it comes to the end of the day. I'm like, strangles just sound good, man. They just sound good. And I'm like, yeah, they could stall it out for a little bit. And then you just see a bunch of volatility come in. And you're like, wow, it's the market feels like it's on
Go ahead.
On
Yeah,
some
you
crack.
can say it. I knew it was coming.
It's on what he's on.
Coming. The last time that we stalled out at this level here, we were there for 12 days.
Yeah,
including weekends, of course, but 12 days, 7 different trading days. So it was a minute, and we were just in between the levels of roughly.
It was like 410 to 416, somewhere around there.
Yep, exactly. It was So 407 was a low, 407, 466 was a low, and 417 was a high, but 410 and 415 is that perfect middle ground, and we were just floating. And those were the days
up and down, up and down, up and down.
We're like, are we gonna rip or are we gonna dip? And then on that faithful day of June 9th, we started coming down. The overall market dropped back down roughly from 415 to a low of 360. Yep. And that was over 7
that was in
days.
this 4-hour cross down too, I believe.
Are they going to talk about AMC at all? I mean, seriously. Fox News is the only media asking these hard questions. This is what denial and cognitive dissonance looks like. I think they're talking about what the press secretary said, but I would reinterpret that to mean what these guys are saying.
You throw it on the 4-hour. That was a pretty big cross down.
Let's take a look at that. Yep. Yeah, it was. Yes, it was.
That was nasty. Look at that. If you saw that on your chart and you knew what you were doing with these EMAs right here, look at how big that move would have been.
If you paid, if you joined our group and you understood how moving average crossover strategies work,
I'm familiar with that. You're below the EMA, you get rejected, you fall below that
maybe
box.
Even made back the money you paid me.
The lowest support resistance is already highlighted on the chart. You get the put signal, and you are swimming in it. So this was 12 days, 7 trading days of nothing, right? Of that 710 to 715, that nothing action. And then you had that put signal that came down from June 9th. And in 7 days, you have a drop of $48, 11.74%, a huge dip in the market. But that's the low that we've seen so far. So let me ask you a question then before we get into too much else. What do you think the market does next. Not this week coming up, because I think earnings season is still gonna be a bit tough. But do you think we have an opportunity to rip, or do you think we have an opportunity to kind of do one of those pump fakes and come back down? I'll kick it off by saying I think we have a little bit more upside, and then I think we're going to retest some lows.
I would have to agree with you there too. I think the little exuberance.
All right, my friend, have a good one. Be
little...
safe out there, and yeah, there's not anything here. You know, you're not missing anything, so enjoy yourself.
Uncalled for. Like, what's the main reason why we're seeing the market pump? I think one of the reasons is that you've seen stocks sell off so much, and the earnings weren't as bad as people were expecting them to be. So they still weren't great, but they weren't as bad as they could have been. So you're seeing people and money start to flow back into the market a little bit. And then after kind of this earnings cycle finishes, you start to see a little bit more of a reprice, because this is kind of like coming to a head right now with, okay, we just got GDP. We just got the most recent rate hike. We're coming in through kind of, I'd say, the
just got the most recent rate hike
of earnings season with all.
Yeah, and swear to God. Let's see here. Yeah, you just got the most recent rate hike. Oops. Oops. And this is a 3-month yield. And look at that. It's actually down. Why did the market pump? Two-year yield. Down. But the Fed just raised
really big companies. You're going to see,
right?
Some pretty important ones in some different sectors report at the later half.
Yeah.
But once you end up seeing that kind of fizzle out, I just don't see a reason why institutional money would start buying this now.
Exactly. Any last things to kind of keep an eye out for this week?
I think the name of the game again, since we talk about earnings all the time, just be careful, people. Like, don't be going crazy on earnings. It's not worth it. Most of the time, it's a coin flip. It's a gamble. Be very careful with what you're going to do. We talk about this all the time. It's less than 2% every single time of our portfolios when we're going into earnings. These are not big trades. Just be careful with them. And again, just trust the charts, people. If you guys want to learn more about what we're doing, Team I'll have a link somewhere. I'll have the link down below. Come check us out. Get the charts. Get all the live.
First of the month, guys.
First of the month.
Monday, first of the month. Get your ass in there if you guys are considering doing it, because you get the best bang for your buck. It's the most amount of days of the month in there. It's pay when you enter, right? So on Monday in the pre-market, STV's gonna be live in the pre-market. I'll be live in the afternoon.
Yeah, pay us when you enter
as well. Like, get in there, get all the education, information, all the indicators. We got a syllabus of videos. I have some more. We have videos coming out every week, basically, for the premium members, right? So we'll have some fun with it. But it's good stuff, guys.
These trading experts.
My guy.
Good to see you, buddy.
We'll see you next week. Yeah, actually, you know what? We might see you midweek with the.
We might have to do another one.
AMC, and then exactly the post. So tell me what you guys say in the comment section.
Great.
All right, guys.
Awesome. Okay. Let's see. I think we got time for one more video here, probably, and let's see what we got. We'll go back here real quick. All right. First wave of liquidations coming soon. But they've been talking about this liquidations for months. There was one that I think it was the Creative Investor did yesterday or a couple days ago. Are taxes a scam? Okay. Infinite is infinite. I mean, it's telling that there's so many of these videos that are Finance News and Stock Talk Daily. That those two are just extreme, and Benji, his channels. They're just nonsense. Don't stop making money ever. Good idea. That's the idea. Reverse split. Reverse split. Pounce equals dividend? Well, no. No. AMC gamma squeeze with this woman. Okay, maybe we'll do 2 more. Oh, Lynn's here. Hi, Lynn. You're late, but you're here. That's good. Welcome. Let's see. All right, so we got CSI here, crime scene investigation, investigating the crimes of Wall Street. CSI Wall Street. See, we got Neeks 808 is here as well. Hello. And we're trying to load here. Got a page unresponsive. Oh boy. Tell you, when this thing squeezes, I'm gonna have to buy a new computer. Get rid of my dial-up internet. Had it for so long. Okay. Don't know why it's so slow today. Don't really understand. Swingers Club is not open today, so I don't know. Fuck. All this for a CSI video. All right.
What's up, everybody? It's the Common Sense Investor coming at you with another video. First off, yes, I've been drinking. Second off, yes, I've been smoking.
Well, first off, yes, I've been drinking. Oh my God.
Another video. First off, yes, I've been drinking. Second off, yes, I've been smoking. Third off, I got a message for all the YouTuber influencers. I got a couple I'm going to name out specifically, so listen up. I'm calling you out, Trey Trades.
Uh-oh.
I'm calling you out, Masked Investor. I'm calling you out, Short the VIX. I'm calling you out, Review Dork. I'm calling you out, Teddy Zane. And I'm benching Teddy Zane with the rest of them motherfuckers simply because of the money he claims to have. But let me talk to y'all for a minute and let's think about this. Tomorrow, you will watch a video from one of these assholes that I just mentioned. Okay? They're going to be telling you what we need to be watching for, what we need to do, and so forth and so on, getting ready for pre-market on Monday. Okay?
Yep.
While they have made over $1 million trading AMC. And while people like you and me sit here and struggle, they're going to make a video tomorrow about what we need to do to end this, or what the ortex data says, or whatever the short interest rate will be, how many shares they'll have to borrow. When you made over $1 million trading this stock, Trey Trades, Masked Investor.
Well, he's not going to, Trey's not going to come out with the video unless he's already that wishy-washy on his retirement. But point's taken, though.
Who else? Review Dork. There was 5 of y'all that went to Kansas. We call y'all the Kansas 5.
Yeah, we do. I called him that first, actually. But you forgot Rogue the Legacy. Nobody cares about that guy anymore.
But let me ask you a question.
He was a nobody then. Now he's a former nobody.
Really wanted this to happen and be over with? You've known for a year now, there's a lawyer named Wes Christian who will take this case. It takes
He's been hanging out with Brenda.
$36,000 to get the program that can prove who is naked shorting this stock. It's that simple. $36,000. But everybody expects us to do a GoFundMe so somebody can stick the finger up our ass and take the money.
Oh.
When y'all done made your money, you've made over millions, all of y'all.
Only 36 grand. Well, that's like 3.5 of Trey's $10,000 tips that he gave out that one day when he went to Applebee's and all that. So
YouTube
kind of puts a different perspective on that.
You claim you ain't a YouTuber, but if your monetization is on, you're making money. And I know how much you make, bitch, for how many views you get and so forth. Because I'm a YouTuber too. So I'm talking to you too, bitch. Now, do y'all really want this shit to end? There's ways that we can do it.
Lord, I think they were talking about getting Wes Christian involved and going the legal route, trying to prove this legally somehow, just like the other 2 or 3 times they tried to do this.
But it takes money. And y'all motherfuckers done made the money. Lou, I see your new watch and all that other bullshit. I watched when Astro moved into his new place, and I watched when Trey's moved from the bear.
What about Jack Hunter, though? You've seen his walls get more and more barren. I didn't see any videos from him lately, so maybe he just
Eric's when he was supposed to be a lieutenant or a captain in the military, gets out of his contract with them because he made so much fucking money. And now he lives in a new place. He bought his mama a new car. Why can't you help this fucking movement? Why can't you get the necessary lawyers like Wes Christian or Hogan and Hogan that can help us stop this shit and bring the Moass?
Probably because they know that it is not a reality. They know that it's over with. Why would they waste their money on a lawyer that probably told them, yeah, this is not worth pursuing? They've already made their money. So again, you know, you have to consider the fact that the whole thing is implausible, wrong. The ship has sailed, etc. That's what's missing here. That is what is missing.
Can't do it.
Because among other things.
Not in your best interest, is it? So I'll probably lose a lot of subscribers for this. But if you agree with me, next time one of them assholes posts a video telling us what we need to look for tomorrow, no, we need to look for one of you motherfuckers hiring a lawyer to find out about the naked shorts. It's not as simple. I'm looking into it. It's not as simple as the CEO wanting a share count. It's not that simple. It has to be proven. And Wes Christian said he could prove it. And he only needs $36,000 to get the program necessary to
I can prove it. I just need $36,000. That sounds like something a lawyer would say.
In this stock. So where are y'all at?
Maurice Levy.
I'm calling you out, and everybody watching this video should call you out, and y'all ought to share it with every group you're in with YouTubers that says we could end this shit if these assholes would put the money up that they made trading AMC off our backs. And that's my view. Or like the song goes, that's my story, and I'm sticking to it. I hate to sound like Joe and the rest of them, but it's time for those that have and have made it off our backs while we held to pay their fair share. Get that fucking lawyer and let's figure out what the fuck we need to do. Make money off the live stream with him. I don't give a fuck, but let's get this thing moving. Love y'all. Be blessed. See you in the next video.
So it won't be too long before he, I don't know. Seems like he's probably getting towards the end of his rope with this. Citadel loses. This is the one. ISDA margin calls. ISDA margin calls with this clown. God. So what did we learn from CSI's video? What did we learn here? One very, very simple thing. Don't drink and YouTube.
Give a fuck, but let's get this thing moving.
Don't drink and YouTube.
The ISDA's Phase 6 initial margin requirements go into effect on September 1st, 2022. So we're going to go ahead and read these two paragraphs to give you guys some context behind what is actually going on here and make it all make sense. And then we're going to talk about AMC stock. We're going to talk about earnings, how this could play into earnings as well as broad market trends to possibly give us some pretty good upside. So let's get straight into it. As of September 1st, 2022, regulatory initial margin, in parentheses IM, requirements will apply for the first time to hundreds of global counterparties that belong to a consolidated group for which the average aggregate notional amount of derivatives transactions exceeds 8 billion euros or a similar amount in local currency. This compliance date is commonly referred to as Phase 6, since it is the sixth global compliance date for the phase in of regulatory IM requirements since September 1st, 2016. So this is the sixth time that initial margin requirements have been updated. It goes on to say that ISDA estimates that more than 775.
Let's see here. None of your business says, what the heck does it take to wake these people up? It was over June last year. You held too long. It's time to cut your losses, people, and move on. It's amazing. They don't know what they don't know. And that's a terrible position to be in, not knowing what you don't know. Yeah, I don't know what it takes. I don't know. I know that I don't know what it will take to wake these people up. And at the end of the day, you know, that's less interesting to me than getting these grifters to shut the fuck up and quit pumping this shit every week, every day. That's the real problem here. Now, I don't know if it really has I don't know how much effect that has on people, but certainly all these assholes every day saying all of this bullish shit. You know, Robert Kiyosaki confirmed the squeeze. Jerome Powell just did this for the squeeze. Oh, Citadel lost a lawsuit that has no impact on anything. Liquidations are coming. CEO just said $100 per share in the third quarter. No, he didn't. He wouldn't say that. Bank of America. There will be a bailout. Could this be the pounce? Reverse split. Shorts in danger. Because, it's dangerous when the stock goes down for shorts. Gary Gensler shorting AMC. This to me, as long as this is going on, nothing's going to change here. Nothing will change. It's ridiculous.
Counterparties with an excess of 5,400 relationships may become subject to regulatory IM requirements in Phase 6. More than 800 of those relationships may need to exchange IM in the near term following September 1st and therefore should be actively preparing at this stage. Now, what this means is essentially margin calls. Now,
something's wrong with my mic.
Margin is if you look on your Webull or your Robinhood.
Check. Test. Oh. Yes, it is. Test. Okay. Is that better? Shit, sorry about that. I don't know what happened. Should be... I heard the buzzing. I clicked the monitor on and I did hear the buzzing, but I don't believe I'm hearing it now. Hopefully it wasn't doing that for too long. Good. All right, cool. Thanks, Model 3 dude.
Or whatever brokerage you use, TD Ameritrade, doesn't matter what brokerage it is, and you have a margin account, you will see a nick.
So Lynn says there are known knowns, known unknowns, and unknown unknowns. That's where the apes are. The most dangerous of knowns, the ones you don't know that you don't know. So saith Karl Rove. You had me until Karl Rove. But, you know, if he did say that, yeah, it's true.
Initial margin, and that's the money that you have to, at the bare minimum, keep in your margin account, unless you want to, you know, do away with it and go margin crazy and get a margin call, right? That's your initial margin requirement, and this is the 6th time that we have got this implemented since 2016. It's directly related to the derivatives market, and as you guys know, the derivative market alone is much larger than the whole entire stock market. I think the US stock market is worth around $45 trillion. The derivatives market is worth like $400 trillion. It's absolutely colossal.
Insane. Oh.
And that's why these new requirements are going into effect. It's essentially to make sure that, you know, not one party, like a Citadel, for an example, is taking on all of these risky bets that can basically get 100 or 1,000 times leverage and cause a whole lot of losses across the broad industry. So it's more like a reevaluation than anything else, but there will be, you know, changes in the IM requirements, the initial margin requirements, and potentially, you know, swap hands from one hedge fund to another, to a broker, to a bank, all these other different parties. Is 775 counterparties. They're not all hedge funds, they're not all market makers, they're not all banks. It's a little bit of everything that is going on here, and this goes pretty much into effect with anyone that does over $8 billion worth of derivatives trading per year, which is a lot of different firms, banks, market makers, so on and so forth. So September 1st, that is a pretty big date to watch in regards to AMC earnings as well. We covered this in the last video, but AMC stock, 5 out of the last 6 earnings have been a positive reaction. Now, I know what you guys are thinking. If you did not watch the last video, you did not see the breakdown, you're like, how is that? It's not the day after earnings or the couple days after earnings.
Right. No, I guess I'm going to have to go a little bit better quality. Damn it. Well, we can look at this. So it's pretty boring. Pretty boring. Get the right mouse here. Pretty boring. Not much going on here. Yeah. Yeah.
I mean, in which AMC has a positive reaction after earnings. No. The next 2 to 4 weeks after earnings have almost always, since we rallied in January of 2021, been a bullish reaction. Back here, Q1 of 2021 was great. Q2, well,
everybody had money.
Well, you got the first big rally with AMC going from $8 to $72.
Everybody had money.
Back here in August of 2021, same thing happened, 32 to...
Everybody had money. Inflation hadn't kicked in yet.
52, very substantial rally right there. November was the only earnings where you actually did not come back higher than the day of earnings, which this is the one that breaks the trend. But even back here in March of 2022, well, you've seen a pretty colossal rally from about $12 at the low end to $36 at the high end, and even back here from $9.70 per share all the way up to $18. About 83% of the time, you see a rally of 50% or more after earnings in AMC stock, given the next 2 to 4 weeks after earnings. So if you do start to see some margin calls, and like it says right here, you know, more than 800 of those relationships may need to exchange initial margin in the near term following September 1st, and therefore should be actively preparing at this stage. I think that's pretty intuitive of what might happen around September 1st. Now, we might see this as a whole market event. This could be a pretty big deal across the board, or you might just see different stocks getting a little bit juicier, right? You might see AMC, might see a
Probably
lot of FOMO.
not. Every time there's been a catalyst like this with a date, hard date attached to it. Remember Boss Blunt's whole thing. What was that called? The Chinese military stocks kicking in. Nothing. Absolutely nothing. Because this shit has been known. They have known about this forever, for a long time, since it was announced, whenever that was. I don't know when it was, but these guys are just now finding out. They're just now hearing about this. Probably from crackhead Bigums, right? He's been talking about this for a while. So the implication is, oh yeah, they're waiting until the last. They don't wait until the last minute to do this shit. They don't. How many times do we have to see that before they stop hyping this stuff? It's nothing new. They didn't just find out about it, even though the ape influencers did. It's stupidity.
Start to hit the markets around this day, as you are seeing those funds moving around a lot in real time.
Exactly.
Around September 1st. So there is that. In regards to AMC earnings, you know, August 4th, we get earnings. That's next Thursday. 4 weeks from there would be September 4th. So roughly, if we follow the same trend, 83% of the time we have after AMC earnings, if we just follow that trend, it should, in theory, match up pretty perfectly to what we have seen in the past, and it could help to bring a rally or potentially make a rally even.
Hey, creative investor, don't drink in YouTube.
More aggressive.
Take a page from CSI.
That, as far as AMC and the actual ortex data, you can see the dollar amount of shares that are currently sold short is sitting at $1.47 billion. Estimated short interest.
Yeah, and it's down 10% from 7 days ago.
Free float at 19.59%. Free float out on loan 28.02%. Shares out on loan 144.45 million. Days to cover 3.45. Cost to borrow of 9.71 and 100% share utilization. Now, if we go ahead and look at the cost to borrow numbers, cost to borrow max sitting at 10.1%, cost to borrow average at 9.21%, and cost to borrow minimum at
0.003 cents per share per day.
Given what Aron has said about this upcoming earnings and kind of what the expectations are, I do think the cost to borrow rate will probably be heading up into earnings, and I would doubt you're going to see a lot of shorting that happens heading into earnings.
Really?
It doesn't take a genius to, call out what I, am essentially making this video about. There's a lot of bullish things going for AMC stock. And as you guys do know, if you follow this channel, at least over the last week,
there have been a lot of bullish things for AMC stock for the last 2 fucking years.
Orders with AMC.
The last 2 years.
Single orders over $1 million. One specific order was a January 20th, 2023 call contract for the $25 strike worth $1.3 million. That is estimating a big rally is to come, right? If we've seen another rally like we did see last earnings, back in March, well, that could be a very good contract, right? So you're seeing a lot of those weird orders. Unfortunately, Ortex does not let me go back in the option flow history.
That's terrible.
Last week, because we are starting a new week. So that will be very
Ortex doesn't let you do that.
Pay attention to these videos heading forward.
Guess who does? You don't need to have Ortex. to look at this stuff. But I mean, I'm not gonna deal with it now. But we can just look at the options data from Friday at least. Let's see. See what the top trades were. $18 calls. That's selling though. 12 puts. That's buying for this coming week. 18 calls. Buying. This could be no. I mean, only 200,000 contracts in general, so not even that much. Okay, but you can look that stuff up on Thinkorswim.
Forward into the next couple of weeks. Now, as far as the option activity on Friday, you only seen two orders totaling about $40,000, positive order value of 100%. So it looks like not too much activity on Friday, but the activity that we did get was to the bullish side. So there is all of that. On another note, what the markets are really concerned about as of right now, and the one thing you guys need to know about the broad markets is that the markets are pricing in and fully expecting at this point that inflation will come down, that inflation has peaked and the Fed will not have to act as aggressive. You can see that in the Fed funds futures market, where about 96% of market participants are only expecting a 50 basis point rate hike. That would mean inflation is cooling down over the next two CPI readings that we get. We will get a CPI reading for the month of July. That will come on August 11th, and then we will get the August CPI report coming on September 11th, and then we got the Fed meeting September 21st. So I will tell you guys right now, if CPI continues to go higher, if inflation in general, the different readings of inflation continue to go higher, you're going to see more pain in the stock market. You're going to see the Fed raising rates more than 50 basis. Inflation has Activision, Avis, Budget, CVS, Health, Regeneron, Generic, Yum Brands,
Generac.
I personally invest in AMC, Block, and Fubo being some of my largest holdings.
Okay. All right. So keep grabbing the wrong mouse. That's annoying. I keep clicking the wrong things. All right. Ah, God. Okay. All right. There we go. All right. Okay. Huge week ahead. Oh, Scavenger was streaming 35 minutes ago. Shit. Okay. Let's see here. Let's take it out with, I mean, there's not a lot coming out today. I really thought Jack Hunter would have put out a video, but let's see. Citadel versus SEC, of course. Gonna love that. Music videos. Wow, that's the last one he's got out. Well, all right. Let's take us home, Jack. Let's.
What's up, guys? It's Jackson Hunter. I'm back with another GME stock update today.
GME stock.
July 29th. Please hit the like button.
It's a GME update. Oh, well. Same difference. Only difference is the ticker, right? Same boat. Yeah, even the trolls are unmotivated. Well, I mean, considering the fact that Trey threw in the towel.
Please smash that subscribe button. I love and appreciate you.
Gong.
Oh, GME stock was up on the day 0.5%. The regular trading hours at $34 1 cent per share on a volume of 3.9 million. Again, with a very low volume. Check this out. Intraday low of $33.10. And then it spiked up just a couple percent to $34.80. And then declining into the rest of the day. Ending the day at $34.01. Check out limit buy at $33, a big one at $33.30, limit sell at $34.02 and $35. And after hours, you have one big limit buy order at $33.70. By the way, this is not financial advice. I'm not a financial advisor. Please do not make investments based on what I say in my content. That's right. Check this out right here. If you want to get free stocks, click my referral link.
No. No.
For stocks deposit, a cumulative total of $2,000.
Yeah, put on a shirt, dude. Put on a damn shirt. There we go. Put on a shirt. I don't understand the trend. The shirt was trend.
1 hour ago.
Here we go.
Securities loses Flash Boys lawsuit. So electronic trading giant Citadel Securities lost a legal battle over an effort by the stock exchange featured in Michael Lewis's Flash Boys. It's a book from like 2014. The stock exchange is called IEX, to prevent the potential harms of high-speed trading. In a ruling Friday today, federal judges said the SEC acted properly when it allowed stock exchange operator IEX Group to launch a new trading mechanism intended to thwart ultra-fast trading strategies. Now, I explained what happens in the AMC video. I'll explain it again. So, this is what was going on. The founder of IEX Group, I believe it's Brad Katsuyama, Brad Katsuyama, one of the two. Great guy. Check out the 60 Minutes interview if you haven't watched that on Michael Lewis and IEX Group. But so what happens is a institution will be able to see retail's orders or somebody else's orders before they are able to fill it. So say I want to buy 1,000 shares of GME. Okay, this institution is able to see that. And so they'll be like, oh, I see Jackson wants to buy 1,000 shares. So before my order gets filled, they are going to buy 1,000 shares of GME at a couple pennies less than what they're going to sell those shares back to me. And so they keep the profit. They keep the difference. And it might not seem like a lot because they're only doing a couple pennies or a fraction of a penny difference, but they do it millions and millions and millions and millions of times. And that adds up to millions of dollars in monetary gain. So that's basically high frequency trading. It's been going on for a long time. So this is pretty big right here.
Not really.
Citadel Securities sued the SEC
not really that big
in a bid to reject the mechanism called the delimit order type in 2020. So Citadel Securities loses the lawsuit today. Check this out right here. This is why.
Okay. All right. How about this? This is why I say it doesn't matter. It's irrelevant. It may become more relevant, but especially because, you know, 2.68% market share on IEX exchange. Okay. And I'm not really sure what this means here with lit volume. But the lit volume is a smaller subset of the total shares handled. So I'm not really sure how that all breaks down and what unlit volume would be on this exchange. But anyway, regardless of that, 2.6%. Now, the record was 3.371%, and that was in 2020. So there's a chart down here somewhere, right here. Our volume, our market share, and it has been rising. Yes, this is the beginning of the exchange right here. But why did it go down here? Did all trading volume go down there? I don't know. But you know, this is one market. Okay. So, you know, Citadel, they're scared. Obviously, it's going to hurt them. The only thing that will hurt is free trades. I think it will have no effect on anything. It won't hurt free trades because none of them, they don't, the free trades, they don't get routed to the exchange. Essentially, they're off exchange. So I don't even see that being thinking about. I think it's a big nothing burger.
I hate your conventional job in 2022.
Most of it is.
This is revenue per employee of selected tech and internet companies in 2021. Netflix 2.6 million, Apple 2.3 million, Facebook 1.6 million, Microsoft 928,000, Twitter 676,000. That's how much money each employee is bringing in for the company, and they are not making anything near that. That's why jobs don't work in 2022. That's why I'm so passionate about socioeconomic advancement.
That's why jobs don't work in 2022. Oh, is that why you don't have a job?
Why jobs don't work in 2022. That's why I'm so passionate about socioeconomic advancement. So much C4 Sundays update.
Wow.
Peace.
Okay. All right. Well, here we go. Here we go. Here it is. Here we go. There we go. Roll another blunt.
Roll another blunt, man.
These are good times. All right. So last look here at the futures. It's pretty flat. So Lynn says this will fade away. The ones damaged will be forgotten. No lessons will be learned. Rinse, repeat later with different product. Ad infinitum. Yep, can't say I disagree because nobody remembers people who blow up their accounts. It happens all the time. Happens every day. There's no pride in that. Yeah. Song's been kicked. Yep. And over on Reddit, meanwhile on Reddit, we've got fanaticism, ad infinitum here.
You got a real bad temper. I got another woman that wants me to pimp her.
Let's see, where is it? What is Pounce? I love this one right here. Here you go. What is Pounce? Reverse split. 2 for 1 and half of all the shares vanish. Shorts obliterated in 72 hours. Moon. 2. The dividend returns. The amount doesn't matter, even if it's only 1 cent. Just the announcement itself will indicate profitability, and the stock will gamma, if not moon, as whales pile in and lenders panic and margin call the borrowers. I mean, so many things wrong with that statement, I wouldn't even know where to start. 3. NFT dividend partnership with GameStop. Think Overstock, except this would pump GME as well, dealing 2 punches to the hedge funds.
You don't trust me, I don't trust you. Now what the fuck?
Acquisition or merger with another theater chain. AMC is the largest in the world and also owns Odeon. Cineworld is the second largest with theaters in Europe, and they own Regal in the US. There's also IMAX, which produces content as well as showing movies. 5. Expansion into cruise line industry. Ships are getting more advanced in their entertainment. Their live Vegas-like stage shows are a relic of the past. Huh? Refitting those huge spaces as luxury AMC theaters with gourmet food and drink service makes lucrative sense for both. Yes, I want to go on a cruise so I can sit in a fucking movie theater. That makes a lot of sense. I could totally see Virgin Cruise Lines doing that, and CEO Aron has connections to Norwegian. So annoying. 6. Hostile takeover of Redbox. AMC already sells those movie cards in grocery stores, and Redbox also has a streaming service. It's a relatable match and a low-risk way to expand AMC into homes. It would also moon Redbox. No. Just no. Bottom line, we don't know what the Pounce will be. And the good news is that the hedge funds also don't know, but you can be certain the pounce is designed to enrich AMC investors. This is what denial, confirmation bias, and ignorance look like right here. By No Train 2. It has zero, it doesn't have any medals either. It's interesting. It has no awards, no medals. But anyway, there it is, guys. One of those 6, from traditional to outrageous. There it is. All right, enjoy the rest of your Sunday. I appreciate you all being here. Let's see who's here. Antoinette, Model 3 Dude, and Lynn. So glad you were able to join us, Lynn and Antoinette, and enjoy your week. I'll catch up with you early next week. We'll see how it shakes out. Till then, take care. Have a good one.